Welcome to Alpha Recap, your after-hours rundown of the market's biggest stories. The tape is closed for the day, and we are digging into what moved stocks and why. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Today was a classic case of concentrated AI mania colliding with macro crosswinds. Some big winners, some big losers, and a lot of headline-driven dispersion.
Exactly. So, what really stands out here is the split personality of the market. A few names basically ran the tape, while the rest of the market stayed kind of sideways. Let's start with the big one, Hewlett-Packard Enterprise.
HPE had one of the day's biggest moves. It finished the day up about 30% after what analysts called its biggest beat since 2018. That was driven by a networking and server demand bonanza tied to AI buildouts.
And the way coverage framed it, analysts are rerunning valuation models with some pretty eye-catching inputs. They reference numbers like 175.93%, 66.11%, and 1.41% in different model adjustments. Those are the kinds of data points that force investors to think differently about growth and optionality.
Right. And to put that in plain terms, when a hardware vendor proves it has direct exposure to scalable AI infrastructure, people suddenly price in more revenue and maybe better margins. But yeah, that one-day 30% pop raises a sustainability question.
Honestly, I was a bit surprised by this one. Is that a durable re-rate or just a headline-fueled jump? Some analysts say it's legit secular demand. Others say you need to see follow-through on guidance, backlog, and gross margin reconciliation.
Which is why the watch list item is verifying results over the next couple of quarters. If HPE prints sustained orders and margin leverage, that supports a durable re-rating. If not, it could be a classic overhang after a blowout day.
Another cross-cutting headline was that Anthropic filed a confidential IPO prospectus. That move got a lot of attention because a high-profile AI company filing to go public changes the comparables and the capital markets dynamic for the whole sector.
Filing confidentially is standard for big private companies. It lets them start the S1 review without immediately disclosing everything. But the timing matters. The market interpreted it as management seeing a near-term window to list.
So, to translate that, if Anthropic goes public and the deal lands well, that could be a big catalyst for the AI ecosystem. It might give investors a direct way to access foundational AI exposure instead of relying only on incumbent public cloud and infrastructure names.
Yeah, although opinions diverged in the coverage. Some analysts think a successful Anthropic offering lifts all boats via sentiment spillover. Others worry it will sharpen valuation comparisons and could actually compress multiples for some public AI plays.
Short reaction.
Hold on. Say that again?
Big deal or mixed implications. Exactly.
Let's talk geopolitics for a second. There was an exchange of strikes near the Strait of Hormuz, and that nudged Treasury yields a bit higher. Even modest yield moves changed discount rate assumptions, especially for long-duration growth names and yield-sensitive sectors.
That reintroduced risk premia into fixed income, which put pressure on some defensives, and with it created cross pressures across equity sectors.
And that helped explain why the market felt so patchwork. While AI infrastructure names ripped, other parts of the market faced macro headwinds from higher yields and renewed geopolitical risk.
Individual stock volatility was high. Intel slid down about 5% to $114.68 on very heavy turnover. Roughly 188 million shares changed hands. So big moves on both sides.
Right, and there were other corporate actions and filings that fed the narrative. A FedEx Form 8K included a 72.17% disclosure that analysts quickly fed into valuation work. Small items like that can have outsized modeling impacts.
Also notable, Berkshire Hathaway's stake in Taylor Morrison was read as a potential signal that the housing market might have bottomed. Coverage mentioned a $72.50 share level and about 24% figures in some analyses.
And then there was Barry Diller, with an about $12.4 billion offer for MGM, which, yeah, was an eyebrow raiser for leisure and recovery plays. Big offer, big headline.
Short reaction.
That definitely tabbed the leisure sector.
Another theme from the day, active dispersion. HPE's re-rate, Intel sell-off, strong results out of FTI Aviation amid supply constraints, and Tourlight Capital reporting about a 16.9% return for its fund. All of that supports the idea that stock-specific stories are driving returns more than any single macro narrative.
Exactly. When macro signals are mixed, some strategists are more constructive on cyclicals, like Morgan Stanley. You still get pockets of mania and pockets of stress. That's why position sizing and liquidity management are front and center.
So, let's break down implications for different investor types. First up, long-term fundamental investors.
For long-term folks, HPE's print and Anthropic's filing should just be new inputs for multi-year forecasts. Analysts note it makes sense to rerun discounted cash flow models and consider optionality from AI demand. But they also caution against treating one-day moves as final verdicts.
Momentum and tactical traders had clear signals. Volume-driven swings create trading opportunities. HPE up about 30%. Intel down about 5% on heavy volume. That's momentum. But traders should watch overnight risk around geopolitics and filings that can flip sentiment.
Income and conservative investors got a reminder about duration risk. Rising Treasury yields change the math for income portfolios. Names like FedEx and some insurers that are sensitive to underwriting and investment income need extra scrutiny.
And for macro or sector rotation allocators, Morgan Stanley's tilt towards cyclicals, plus M&A and housing activity, suggests some strategists see earnings momentum broadening. But rising yields and geopolitical fragility argue for selective, not blanket rotation.
Analyst agreement and disagreement is worth calling out. Most agree that AI is a material demand driver for infrastructure vendors. That's a common thread. They also agree the market is being driven by stock-specific catalysts.
Where they diverge, sustainability of re-rates, how Anthropic's IPO will affect incumbents, and whether cyclical optimism has legs, given macro and geopolitical risks.
So what should listeners put on their watch lists? First, re-rate verification. For names that surged on AI linkage, track subsequent guidance, backlog metrics, and gross margin reconciliation. That's the core follow-through check.
Second, watch Anthropic's S1 process. When the S1 reveals revenue, customer concentration, margins, and cloud partnerships, we'll see re-benchmarked multiples across public AI-related names.
Third, monitor yields and oil tied to geopolitics. Even modest moves there can shift leadership between defensives and cyclicals.
Fourth, track dispersion and liquidity. With a lot of stories driven by single company disclosures and earnings, execution risk matters. Position sizing and trade liquidity should be central.
And lastly, confirmatory data over sensational headlines. Analysts consistently cautioned that headlines are inputs, not final verdicts. Fold the data into models rather than treating headlines as the whole story.
Quick reactions.
Lots to watch.
Yep, not boring today.
Before we wrap, the key takeaway? Thematic leadership around AI infrastructure is real and is materially affecting valuations. But how durable those re-ratings are will depend on follow-through data, macro stability, and the flow of new disclosures.
And remember the operational task for allocators and active managers? Update financial assumptions where appropriate. Monitor macro proxies like yields and oil for regime shifts. And manage position sizing amid elevated dispersion.
A quick reminder on the rules here. This episode is informational only. We are not providing personalized investment advice or recommending any buy, sell, or hold actions. Analysts note data and sentiment. Please consult your own advisors for decisions.
All right, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close to unpack more headlines and market moves.